How are we? I've got a little echo here. There you go. How are you? Everyone doing good? No, Kathy, I am out of those. My continuation puts. I took a large chunk off of those at like 25-30% ish. And then I left a trailer on for 100% winner. And then I took a small bounce when we, a little 25 percenter, and then stopped out of my trailer as it came down and around. And then right now I'm trying to bounce it a little riskier. I put it in chat. It's risky. There's just an order block sitting here, and I'm trying a little, basically a sniper 1.0. I front ran it a little bit for a bounce. So, but I put in the chat risky because we've had some pretty nasty selling, and we've come a long way down. And it's like trying to catch a falling knife, right? If you can't manage your risk, then these are not easy trades, right? So we'll see if it gives us the bounce we're looking for. Yeah, there's no intro music, John. I figure I'd just do that once a day. D-Man and I are, and Nate, I think D-Man and I are battling it out. We're battling it out and showing receipts for 100% plus winners. I think he's got me by 1 or 2 so far for the week. So I got some ground to make up. But he's had a couple of like 350 percenters, which we're only counting as 100 percenter, right? Anything above that, it's not, you don't get triple the points. All right, Tix, let's come up here. Let's catch this bounce. So I'm going to scale out of a little bit of this bounce here, but I am also going to hold a piece of it because I don't know why I think this. I don't know. I'm just going to hold a piece of it with a stop out at break even. Just kind of for a recovery into the latter part of the afternoon. Yeah, Walter White. It takes some iron cojones sometimes to put on these trades, especially when you're trying to catch a falling knife or grab a top. But they're pretty effective, the sniper trades, and I really like that. It's the kind of situation where you can be completely flat and come in and make a couple of trades and come in and come out, and you're not. You don't have a lot of overnight risk, right? Riley came back in a little bit. Okay, so maybe a sniper turnaround on Costco, possibly. I don't know. That's not what this session is going to be about. So I'm not gonna get into that. But this session is about volume profile. This is a basics of volume profile. So for those of you who have been in D-Man sessions, he has talked quite a bit about volume profile, and I'm going to come in and talk about the simple stuff, the basic of the basic, so that we can get a better understanding of what volume profile is and how it works. Yeah, Damien, the sniper trades was on Monday. It is recorded. It is up on YouTube, on my YouTube. I'll put that in here, or if somebody could put that in here, I appreciate it. The Nate bot thing, thank you, appreciate that. So you can go in and watch that, plus any one of the other sessions over the last 2, now 3 days, and today's will be up. slightly after the close. Volume profile is the indicator that I have here on the side of my chart. Okay, this shows volume by price. So this is the number of people that were buying or selling in these ranges, just like we have volume by time, right? So down on the bottom, volume by time, we're all probably used to that if we've been trading for a while. Gives you higher volume bars for times during the day where we're getting higher than normal, not higher than normal, any volume data, but you can see the higher and lower volumes for each time period. In this case, we're on a 30-minute chart, and we can see 30-minute bar data for volume by time, right? So that's each one of these volume bars is 30 minutes, just like the candle up here is 30 minutes, okay? So the difference here is that we use volume profile, which is volume by price, which is why it's on the left side of our screen. You can put it on the right side of your screen if you want. We put it on our left side of the screen. And because it's not based on time, you can choose the size of your bars, okay? So if you come in here and we say, my row size here, I like 150. It's small enough that I can get some detailed data. But when you first put this on in TradingView, I think the setting's like 50 or something like that. And you get these huge chunky bars, right? So I prefer to see a little bit more detail, so I like the 150 row size. And then if you're using VRVP on your charts, I like my placement over on the left so that I can see what's happening on the right of my chart. And I turn off all of the value area high, value area lows, and POCs. Okay, and we'll talk about what those are here in a second. So, and the reason I turn those off is because they're an approximation and I'm looking for something a little bit more exact. So when we're talking about visible range volume profile, right, it's what you can see that you're getting data for that section. So you heard D-Man talk about this yesterday, right? I am looking, this chunk of volume profile that you see right here is only showing I need to click that again, is only showing these people right here, okay? So if I'm looking to find levels since that earnings gap up, then I am looking at this block of volume profile. Okay, now if I were to, I should probably use my other tool to draw my boxes. If I were to say back out further, now my volume profile information on the left-hand side is now showing all of these people, okay? Now, that's going to be important for me to know that right here, okay, there is a point of control level that will probably come into effect over here, or at least create some level of support or resistance. But if I'm just looking for levels in here, since this gap up, then I want to come back in and I want to see this actual true data right here. So that's why it's called a visible range volume profile, because you're going to see the volume profile for whatever you're seeing on your chart. So then if I wanted to get into, just the last 3 days for whatever reason, like if I wanted to see, okay, since this gap down here, what does the volume profile look like? Not gap down, but sell off. Now I can see this data and see these point of control levels where I'm most likely going to find support and resistance. Okay, And we call these nodes, so for instance, if we go back out here and we look at since the gap up from earnings, right? We call this node here a volume node or a value area, okay? And you'll hear us say node, and a lot of times you'll see us say value area because we'll talk about a value area high and a value area low. So right now, I'm just going to throw it real quickly on my chart with 2 yellow lines. Let me get rid of this other one so it doesn't get confusing, right? So roughly on this chart, right, that's a value area high, the 2 yellow lines, and a value area low. And basically, I just came to the edges of this block, right, this block, this whole value area, even though we have a lot of different volume information in here, right? I've said, well, this is kind of a clear top to that, and this is kind of a clear bottom. You could argue, okay, maybe it's more like this, right? And what you'll see as we do that is that magically, I didn't look over here at the chart. I could have made the chart disappear and shown you how this works. Yeah, we had a little breakout and then a reclaim of this pattern that was developing. But look how often this has shown a resistance level. And then look at how it's also shown as a support level. Okay, so your value area high and your value area low should line up if you're learning to do volume profile correctly as support and resistance levels. And if you know how, if you've read Ann Cooling's volume price analysis book, the market doesn't just go straight up or straight down, right? There's periods of accumulation, right, and distribution, which means we get these periods like this, which is what we're setting up. If we've come up into that area, large institutions are distributing because they accumulated down here, let's say. Now they're distributing back into the market. They're selling, but then also accumulating a new position, right? And this is what we do. This is where our squeeze is, right? We've come up. That's our bird pattern. And then within that pattern, then we move and the large institutions hit a certain mark or a fair value, and then we start distributing and accumulating there, and the market can then move like this, right? So if you look at the market on any name on a larger time frame period, you see these kinds of things, right? And these are what create these volume profile. If you extrapolate that over here to all this volume data that's created when this consolidation is happening, and we're setting support and resistance levels within that pattern. Does that make sense? Does anybody have any questions there? So when you're trading, let's say we wanted to trade this UNP on it's probably got a squeeze on, let's say 195, not quite, 130, sort of. Maybe this isn't the best example, but when you have a squeeze on a larger time frame and you start to drill down into the smaller time frames, you can see a support and resistance level. And if you wanted to, you could buy at support, sell at resistance, rinse and repeat, right? This hasn't gotten up there, but let's just say it kind of does this, and then it does this, and then it does this, and then bang, right? You're buying here, selling here, buying here, selling here, right? And then eventually a pattern like this, ends up coming here and breaking out, right? And then what is that? That is our bird pattern, right? The bird pattern that we're playing in our TPS. So we're buying when we're near support and near the moving averages, and we're taking profit at resistance and leaving a trailer if it comes and breaks out. Okay? Do you see how those kind of work together? So I'll try and find a better example here. See if I can. Let's see if we can get Nike. So, here, LLY, right? So, here we go. Well, that's not a good example because I want a bigger, let's do this. So let's replay it back to here, right? Let's get rid of our drawings. Okay, so you see this is our bird pattern, right? We've had some consolidation here, accumulation. We've moved up. Now they're distributing back into the market and accumulating a new position. And we're starting to create, or we have created, a volume profile node, right? And within that volume profile node, we have, a value area high, and we have a value area low, right? And we have a point of control. And the point of control, which we haven't talked about yet, I usually like to make red, and that is where the longest piece of volume is, the most people have traded. It's usually the center area. Not always the center in terms of distance top to bottom, but it is where the most trades have been made in this level, where the most people are, and it acts as an over and under level, right? So if you're over that level, you're bullish within this pattern. If you're under that level, I wouldn't say you're bearish, but you're most likely going to drift back down into support, right? It's going to act as both support and resistance on either side of it, right? So what was resistance at some point then becomes support, which you can see exactly right here on LLY, right? We kind of bumped up against that line. We bumped up against it. We broke out. We broke through it, not broke out. We tested it. We pushed up, we came back, we're testing it again, and we're maybe pushing up, but we're staying above it. Okay, so as we start to trade these, this gives us a good idea of where support and resistance is going to be and helps us set targets. And incidentally, great entry points. So if I was looking at LLY here, obviously this is rewound so that we can see a really clear pattern. Where am I setting my best entry points? Down here, right? If I can. I'd like if I'm playing this pattern, my best entry point is going to be somewhere near or at this support level where the pattern breaks down. Yes, I can take it here. I can say, okay, this could be a good bounce spot for a continuation, but then where's my stop, right? It all comes down to risk reward, which is not what this lesson's about. But where's that? It's here, right? If I take a position here and my stop is way down there and my profit target is at the top, I'm a 1-to-1 risk reward right now, which is not favorable if you're a 50% trader. You know what I mean? You want to take shots that give you a better than 1-to-1, 2 or 3 to 1 to 2 or 3 if you can, in terms of risk to reward. So if you were taking one here on this larger pattern, you might put a stop in somewhere like this because you're trying to shoot for a better risk reward. But then you'd stop out here. So you'll see us do this a lot. You'll stop out here, but the pattern's not broken. And so for newer traders, and I don't know if you've been in here before and this has happened to you, before, put a one, a 2 or a 3 in chat, put a 3 in chat if this has happened to you before. We're all in this, Nate, D-Man, myself. You take a trade, and it drifts to, a certain level, and you're like, I'm out, I can't take any more heat. And then you see us say, I'm adding to this, and it bounces, and then, we make, or D-Man makes, 200%. And you're like, God, I stopped out, but the pattern wasn't broken. However, I couldn't take any more heat. Like, my position was, I took too big of a position. It was already down 30%. I just couldn't do it, right? And the pattern's not broken yet. And so we're waiting to see, is it going to bounce here or break? If it breaks there, the pattern's broken and we're out, right? That's not to say that we don't have losses. But understanding where the pattern, what you're playing and where the pattern breaks down is great. So we could take a position here off of point of control, right? But it wouldn't be, for me, it wouldn't be a full position. I'd take a starter just so it was in my account, and then I'd look to add if we got to move back down into there with a stop out just below that. Okay. So back to the overall, volume profile nature of the lesson is, so if you look at SPY, let's remove the drawings. You can look at, a 30-minute chart to see more detail. But if you come out to a daily chart, right, you can see very, very key spots of support and resistance, right? So support, we're above this. This is a very key line right there, right? That if we, for whatever reason, were to drift down into that area, that would act as a support area. That would act as a support area, right? This could act as a support area. And these are major daily lines, right? And so for this one, so we don't really need to know where those are right now, but it's just important to be able to see that on the chart. So now we have this one here, right? This is looks like a small node on the daily chart. And it's going to give you people here, people here, people here, and kind of some people today, right? As far as information goes, because it's visible range volume profile. So what it's going to show you, this, what looks like a little tiny node, is actually encompassing all the people that are in there. So as we start to get closer, like let's take, we want to see back to here, and I want to look at a 30-minute chart, and look at that, flush down. Now I can see this is still that node area, right? But I can start to see more detail. And as we're trading, it's important to know, are these people back here going to really affect what's happening right here? Not really, because we've come back up and through that in 3 different other places, and that's changed. So we don't really need that information. All right, we can come to here and say, okay, what's going to happen right in here? Right? Our volume changes, and we can say, all right, well, if we bounce up, we're not going to start to really see too much significant resistance until 597, and possibly the bottom end of this volume. There's like a value area here, right? That is yellow. That we'll put in yellow. So you can get better ideas of where you're going to find that support and resistance and how things are going to act. Does that start to make sense? This indicator is called VRVP. Visible range volume profile. See if I can catch up on chat as I kind of. How's Riley doing? Come on, Riley, let's make a move. And volume profile is an art. It's not a perfect science. You'll hear, I mean, it's a great indicator, and you'll hear us, Nate, myself, D-Man, Larry, will argue about levels. Larry's favorite thing is here. I don't know if Larry's in here or not. Is to claim that D-Man has to learn his levels better, even though D-Man was the one that taught Larry all how to do levels. But you'll see us come in and say, "Oh, okay, I'm taking a bounce play here," right? If you're just looking at a blank chart, right, nothing on it, and you say, "Oh, okay, I'm taking a bounce play here," and you as a beginner can go, "Well, I don't see it," right? How would you know that that's a bottom or a potential bottom? And what you'll see on our charts is that as you come out and look at the larger chart, you'll say, "Oh, I see that there's a volume profile level there that we're going to take a shot off of." All right, so let's see on Costco. I said there was a possible bounce coming. You got a nice chunk in here of people, and then there's a VP level like right here. Right? And now it's coming into, had I bounced Costco when I said, "Hey, this looks like it might want to reverse," what would I be doing? Look at this VP right here. What would I be doing right now? If I had bounced that, yeah, I'd be taking profit, because we're coming up into, it might push through that VP level there, but I got my bounce. And look, I mean, I don't know if the market's going to stay strong, but look, I mean, I just picked the VP level. I did not pick the chart. I mean, that essentially ticked it to the penny. Do you see that? VP is more reliable, I think, Obi, than in terms of actual spots to take shots. VP for me, because moving averages, VP is going to be the same across multiple time frames. For a moving average to have the right support or resistance level, you have to be, on the right time frame chart that, quote unquote, everybody else is looking at. So, and VP is constant. And playing VP is just human psychology, right? And what I didn't get into is, if you've say you've seen a stock that's been flushing down and people are trying to bounce it, if these people, so on Costco, right, D-Man's up next, so I got to jump off, but let's say people were trying to bounce Costco across this bottom and we flushed, right? Most retail traders have not stopped out because they don't have good discipline, so they're trying to bounce it. So what happens when that comes back into that entry level that they had before? The human psychology of trading says, what are they going to do? They've been underwater, they've bounced it, they're back to their original entry price. They've spent the last 30 minutes in a panic because they're underwater now and they didn't have the discipline to stop out. They're going to sell, right? And so that's where that resistance level comes in. They're like, oh, great. I mean, this isn't the perfect chart for that, but it's a psychology example. Oh, great. I'm back to break even. It's time for me. It's time for me to get out. And then the stock just goes because everybody starts selling again. Anyway, it is D-Man. D-Man is up. D-Man, are you here? I know that was a short example. It was kind of a carryover from what he did yesterday. But I hope that helps. I'll get both recordings up, by the close for today, so you can watch both of them. And don't forget, it's the last day for the $300 off. D-Man, you can grab it from me anytime you are ready.